Hope everybody's doing well. Welcome to Monday. Hope everybody had a really good day and a great weekend. Um, so, got a couple of updates today, right? My schedule has changed for the next couple of weeks where I can't really trade during the morning session for New York. At least not yet. It might adjust a little bit here, but for now, I'm not expecting to trade that. So, what I started doing, I did some back testing, and then last night I started trading the Asian session, all right, the ADR, and then also just looking at the London session. And what I want to do today is we're going to talk about, we're going to go through what I did for Asian session, and then we'll talk through, what London looks like, and also what New York looked like today. I didn't even get a chance to trade in the afternoon, but again, we'll just kind of talk through it and go through it that way. So let's talk about last night. So market opens at 6 p.m. on Sunday night. Now, one thing I will say, you'll see a bunch of notations on my chart with fair value gaps and things like that, and sell side, buy side liquidity. Is so on Sundays I go through and I basically create my chart for the week. Right, so starting out either monthly or weekly, where the fair value gaps I want to pay attention to, where the sell side, buy side liquidities I want to pay attention to, and then so that kind of lays the chart out for me, and that was actually really helpful last night. So I go down to about the 1 hour, so monthly, weekly, daily, and then the 1 hour, and I kind of stop there. Because during intraday, I'll add some additional, fair value gaps or buy side, sell side, just based off of what the price action is doing. But from a week setup perspective, it's just kind of going down to that hourly. All right, and so let's talk about what happened last night. And for some reason, it won't show my little arrows on here. I did pull a picture up. Let me see if this might work a little better. But I want you to notice on this here before I pull the picture up. So this was 6 p.m. Eastern time. And price opened up here, right? So this is our new week opening gap from the ICT standpoint. It's also the weekly open, right? This little pink dash line here, that's my weekly open line. I always have weekly open and midnight open on my chart. But this is that new week opening gap. And so price, went up, then it came all the way back down. And then we had this, this was a fair value gap from a few days ago. And but it was a bullish fair value gap, right? And so you see our price comes down, and it tests out the gap, comes back down, almost gets to the bottom, and then it runs up here. And so let me see if I can find that picture. I know I have it because I couldn't get the lines to come up here. So let's talk about. Hopefully it's not confusing, but here's where that 6 p.m. came down. The fair value gap was in here, and so when price came down, I actually grabbed this fair value gap, and I grabbed it right at the top, right, of that of the fair value gap. Right, I grabbed, put an order in, and I'm really just trying to scalp these. So I actually had 2 ES orders, which is not something to sneeze at. The first thing happens, it came down, right. So now I'm negative, right, because my order is right here at the top. I put my stop loss like 2 ticks below the bottom of that fair value gap, right? So I'm trying to limit my exposure. So if it comes down, I'm not doing my regular 5 points and let it ride. If it comes down, I will just get out at that point and start over again. All right. So what's happened? All right. So we got in here, and then price went back up, right? So went above the fair value gap, bullish fair value gap. Price expected to go up, and that's what happened. And it goes up. Now, it got up all the way up to this new week opening gap, right? Right above that weekly open, that pink line. And so for me, that's a good scalping point, because a lot of times that new week opening gap, that weekly open, similar to what we have for our midnight open, acts as a strong support or resistance. And so in this case, it was resistance. And so I ended up saying, let me just go ahead and jump out, all right? And so got out here. That's about 3.5 points. Nothing to sneeze at, again, especially with 2 contracts. All right. So I was like, okay, that's pretty good. I was good there. And then I saw, I said, well, I'm just going to wait now for DR to set up. So that's at 7:30 to 8:30. So I watch DR set up. Another thing to pay attention to here, something we haven't talked about before, is when I see price do this kind of movement inside of the range, and the range was what, 10, 15 points, if that. But when I see this, price is coming down, now I have a 60% probability that DR is going to confirm low. Okay. Which is, again, that's something we haven't talked about before. Not something that's not, to me, that's more of an advanced kind of concept, as far as how you use that. And so I'll tell you how that works out. So right here, let's see if I can see it on this screen. At least I can draw on this one. All right, let's do it this way. So once DR formed, okay, what I want you to notice is right here, there was a fair value gap that formed right in there. Okay, so we see this a bearish fair value gap, right? It's red. Okay, so when price came down, and I said, okay, we got to 8:30 and we're ready to start moving, I see price start moving up. I see three things happening. Actually, there's another fair value gap I need to point out, which was up here. Okay, so these are important because, again, I'm being much more aggressive with my trading, and I'm being much more risk averse on some of these things, right? So I'm taking the risk, but I'm not taking full risk. All right, so if I see it not working, I get out. Okay, so price starts moving back up. So now my expectation is that we're going to come down, right? And so to get to that, though, we have to go back up to come back down, right? And so we started moving up, and so here I see a fair value gap, bearish. Right up here, I have a fair value gap that's bearish, and then the third thing I have here is this this 0.5 fib, right? So if I run my fib from the IDR to IDR, that's the halfway point. That's at 0.5. And now remember, we have not confirmed yet, right? And so my normal strategy, my basic strategy is basically I have to wait for it to confirm before I start, looking for trades, right? In this case, what I'm seeing is price comes down here. It doesn't take out the DR low, but it tried it twice, and then so it comes back up, starts moving back up. So my thought process is price is going to come down, all right? So it might come down from here off of this fair value gap. It might come down off of this 0.5 fib. It might come down off of this negative fair value gap, all right, up here, or bearish fair value gap. All right, so let me pull the picture back over again real quick, and I'll show you what happened. So remember, we got the fair value gap right here. So I took the trade, all right, for it to come down. It went down like 2 ticks, but then it went up against me, all right, it went against me. And so this was I lost 1.25 points on that one, all right? So again, it is what it is, right? Very short, small risk. So that stop got me out. I wasn't, sometimes I'll start, lately I've been starting to try to move my stops around as far as like giving them wider berth. And in this case, I was like, no, I'm not going to do that. All right. So we got, a good result over here off of this move. Okay. Not necessarily a good result off of here. So I'm like, okay, well, let's see what happens next. Right. So a couple things going to happen. One, it's going to actually come down and confirm, or it's going to go up and, either it might go all the way up to here and then start coming back down, because again, my bias, I don't like that word, but that's what it is. My bias was that we're going to have a, downward movement. Okay. So price goes up into this 0.5 fib, and I didn't trust it at first. I'll be honest, because this first time I was actually trying out that strategy with, again, a lot of live money, and so I didn't take this trade. I should have taken it right here, right when the price started coming back down. Didn't take it there. I actually took it late. All right, so so this is where I should have taken it on this. And here, it's a gray line, a gray dotted line. I should have been here. I end up getting it down here, right? So it's like somewhere in that 44.31 area. But then it drops, right? You see how it just shoots down, okay? And so now what it shoots down to, my target was I had a sell side liquidity here from a couple days before, and so once it got to sell side, I'm like, okay, let me get out, right? Not taking any chance. And this was it was more than 5, maybe what's that, 30? Let's say 41.31 to 24. Yeah, it was almost like 10 points. Like 7 or 8 points. But I didn't take a chance here, right? Once it came down and I start to move back up, I just went and cut the trade. Okay, a lot of people won't cut the trades, but again, I'm scalping. I'm not, I'm not even doing my normal 5 point, 10 point. I'm just scalping at this point. All right, so all right, so that was the trade. That was a really nice trade here. Price did what we're supposed to do, and then you think about it. We now have confirmed low, and so the next things we're looking for, all right, from a pure DR standpoint, is price to once we confirm low right here, we want to come back up. Okay, so watching this, no action here, and then now when I get here, okay, again, price has not gone all the way up. Remember, my normal rule is I want price to go up above, right? And which it does. It goes up above here from a DR standpoint, and so I put an order in right here on this candle. Okay, so I'll drag it back over again, and this is probably the last time I use this picture here. So here's so I had two contracts. That's why it's two arrows, because even though it was the same price it sold at, or filled the contracts at, for some reason it did it individually. I had to look up why I had two arrows there, but I figured it out. So anyway, so I come here, and honestly, I only took like 2 points off of this one. Now I could have, right? Because I could have let it play out. But this was a very successful trade. This was a very successful trade. This one was not a bad trade. It just didn't do what it was supposed to do at that time, and so I wasn't going to take a lot of chance here. Also, it was about 11:15 ish, and I was tired, so I'm like, I'm going to bed. So I go ahead and cut the trade here. Really, really strong night for especially for an Asian session. Normally, you don't have that much movement on the Asian session, but again, I did leave some points here on the trade, but I was okay with that because I wanted to go to bed. All right, so let's get rid of that now. So that was Asian. Now, if I was able to stay up, right? If I want to show you kind of what happened here, right? Remember, we took this trade and sold it here. Price comes back around. This fair value, this sell side is no longer active. All right, so price comes all the way back up here, right to the same spot it was before, and it's a really pretty drop from it had been 28 down to 12. So that would have been a nice drop there. Right around 12:40, 1 o'clock in the morning. Okay, so yeah, so that would have been a good one. But again, very happy with kind of the Asian. Looking at London really quick, I didn't trade London, was asleep here, but a couple things to notice here. Again, we kind of had a even down and up move, right? So before we had that basically a solid down move on this one, just came straight down. This one we went down and went back up, so I don't have a bias here. I wouldn't have had a bias here, but then I notice is price is coming up here and it's testing this IDR high. So in theory, my thought process, and if you look at the M7's way he looks at it, that's a indication that it's possibly going to go up, right? And so you could have put an order here or somewhere on this candle with a very, very tight stop down here, right below, let's say right below this lowest candle, and you could have taken that up and just let it ride out. So again, another another nice easy trade if you were in it, but again, who's up at 4 in the morning on the East Coast anyway. All right, so last one, let's go to New York. I'm sorry it's taking long, but again, it's a little bit more of an advanced discussion, so I just want to take a little time and kind of talk about thought process here. All right, so let's go to New York. Again, didn't trade the whole morning. My appointment's from 9. My training's from 9 to 1. And then I'm going to the office, so I didn't really have a whole lot of time. But let's talk about this one really quick. So notice price, up and up. So now my bias is probably going to be up, right? Which is weird, right? Because of what price did. But I want to show you something. Okay, so coming down, we formed 2 fair value gaps here. All right. Now, if I'm being aggressive, I come here, I see this fair value gap has formed. Yeah, using ICT concept. All right, these candles go up and test that fair value gap. They pierce it, and so I also have this. Remember, I have this new week opening gap right here that's sitting right below it. So I got 1, 2, 3, 4, areas that's telling me I don't want to go higher right now. Okay, so if I don't want to go higher, that means I want to go lower. And so what I could do, and matter of fact, let me get rid of this. We don't need this one anymore because this is no longer valid. This fair value gap. Make it a little easier to see. So from here, if I'm being aggressive, again, I could put a stop loss, let's say right above this fair value gap, or tick above, excuse me, or so, and put my and then I can run this down, right? So I can run it down for some pretty good movement. So in this case, since I want it to go down, I want to get in on a red candle. So I probably would have gotten one, two. I probably gotten on this one because this one is a little too early. I wouldn't have saw it. But here now I got four, strong indicators that price wants to go down. I can grab this. I can grab this one here, probably at the bottom of the fair value gap, or at the bottom, or right at the bottom of this where the weekly open is. And so that's down. That's almost 10 points coming down this way. Same thing happens again, right? Price goes up. Again, I haven't confirmed yet, but I'm checking I'm looking at the probabilities of what should happen. So price goes up again, gets into that fair value gap. It still doesn't want to go above it. So again, I can do the same thing. I could put a trade in here, stop loss up here, and let it ride down. And this will would have been a good one. Now, all right, here's where it gets fun. Okay, and this is how you got to start thinking through these trades sometimes. So price comes down here. I could have got out here, and or I could have held it, let it come all the way down. Know anything about midnight open?